Hello and welcome to our latest market video. Since our last video, politics has dominated. The ongoing uncertainty of Brexit, coupled with the US federal shutdown, has left markets stuttering. Both old and new crop wheat markets have fallen since the end of December. Firmer sterling has pushed UK markets lower, and this has been compounded by the overall bearish tone in world grain markets. The bearish tone is being driven by the global export outlook and lack of new, market-inspiring data coming forward following the US federal shutdown. On the global export front, the pace of Russian export growth has been slowing down, and this, taken at face value, should support markets. EU Origins won the latest Egyptian tender for wheat, and this provided some support for EU prices, although the lack of US activity in the tender did cap some of these gains. That said, there is still a lot of grain to be moved by major exporters this season, namely the US and the EU. US weekly export sales data was halted amidst the US shutdown, and this left the market lacking some really important information about US wheat exports, the primary competitor for Russian supplies this season. Without this data, we're left guessing somewhat as to the volume the US still has to move this season. Moreover, on the 27th of January, the EU had 10.8 million tonnes of soft wheat to export, according to the EU Commission forecast. To clear that, the EU needs to move 491,000 tonnes of wheat per week, a pace they haven't achieved so far this season. EU prices were competitive in the last tender, and unless they remain so, it's unlikely to continue to shift that sort of volume this season. This is highlighting a potential accumulation of EU wheat stocks into next year. The window in which to move high volumes of wheat is falling every week, especially with world wheat harvest kicking off in earnest in late May and early June. Talking of next year, the market appears to be anticipating a big new crop. The drop from old crop prices into new crop prices is the biggest it's been for over 5 years. Moreover, at the time of filming, new crop weather was favourable. New crop prices are falling, but importantly, they're still tracking around £19 per tonne above the average of previous seasons. US winter seedings data will be an important marker of new crop availability when they eventually come out. Both the progression of new crop and the pace of exports will also be key market drivers going forward. You can keep up to date on all of these and the overall market sentiment on the AHDB Cereals and Oilseeds Markets page. Thanks for watching.